Friday, February 17. Mr. Trump has been in office for 4 weeks. I have begun asking people nearby in the marketplace, real estate marketplace, friends in finance, in the most neutral way that I can. That I've got a survey question to ask, and I'm not trying to start an argument. I just as neutral as possible. I'm curious about your own and your peers, your customers, and competitors' degree of concern and interest in Mr. Trump and the new administration. And the response that I get, without exception, is a short curse word, and then in a very loud voice, "Holy smokes, we don't talk about anything else!" It's amazing. A man was just here, ordinarily a sane person, who says that he knows that he has to stop watching but can't make himself. The common thread. I think the same thing is true of the financial markets. There isn't anything really going on. The congressional support for what's thought to be the Trump agenda is just disappearing by the minute. It's very hard to get anything done without an engaged president, but there's nothing going on. There's a stack of executive orders, but nothing happens. The legislation pending in Congress is nothing happening, and financial markets, as quiet as they have been, both stocks and bonds, is not a measure of disinterest. It's much more deeply a measure of eyes open wide, head shaking, sweat on the forehead. What now? And one of the markers was Mr. Trump's press conference yesterday, in which he announced that his administration is running like a fine-tuned machine. In any normal moment, a line like that to a group of people like that would have gotten instantaneous, insuppressible, out-of-control laughter at the line. And instead, everybody there just, okay, great, fine-tuned machine. So we're in kind of suspended animation until something happens. The economic data inflow is always ambiguous, but we're doing a little bit better since last summer, and a little bit better than the Fed's forecasts themselves. And it's not entirely clear why, but it looks as though it has legs, which makes me think, and I'm in a minority, that the Fed will tighten next month. It may come as a shock to markets. The big spike in rates on election day, in retrospect, the stock market takeoff may have had to do with Trumpnomics. The bond market move, as much as anything else, may have been a very carefully tilted market that needed practically nothing to tip it over. And I think we've been in denial about Fed tightening. The Fed's forecasts for the economy have been hotter than reality for 6 years now. And so there's a certain amount of, yeah, show me, in regards to Fed future action. But I think it's on the table. I don't think there's anything in play that would knock mortgage rates down, except very low probability accidents. So I'd be on watch. I wouldn't be lazy about locking an interest rate. I would assume that if it's not next month, it's coming. Very best to all. Do try to tear yourself away from whatever media you're fond of, or in my case, I'm watching.